Steve, I'd like to start really by asking you about the financial crisis of 2008. Just ask you a series of questions about it. And the first one is kind of looking back, what, what do you think were the major causes of the blowup?
Well, there are a lot of major causes, Jeff. Uh, One, we had an over-leveraged financial system. Brokerage firms were up to 33 to 1 leverage, and they were allowed to do that. Um, we had banks that were very highly leveraged as well, into the 20 times equity plus uh, leverage. We had uh, in effect, a lending crisis, which was a complex one. It centered around subprime loans. And what happened is that as a result of governmental requirements to increase loans to lower income people, um, we had an unfortunate intersection of technology, which allowed us to in effect, the system to securitize uh, these loans, which led to the production of those loans being 6, 7, 8 times what it had been historically. So we had an artificial mandated increase in these loans, and we had rating agencies facilitate that because what they did is they looked at the historic default rates of those loans, not giving consideration to the fact that there was a massive increase in those loans. So the system had accommodated a certain number of low-income people with a certain number of defaults. When you dramatically increased the number of loans, you went to even a larger pool of people who were less credit worthy, who couldn't pay them back. And so the whole securitization business and subprime loans were a function of an incorrect assumption by the rating agencies, and hence people were buying these securities all around the world because they were rated at the top level AAA, where if you really understood that there were so many more people who were not capable of paying back, that you never would have made them AAA. So what also happened to make this crisis occur is that, at least in my lifetime, I can't remember any AAA security ever defaulting. So it took putting AAA on the securitization top levels so that people wouldn't analyze what was going on, because you didn't have to,
Right.
because securitizations of AAA's and no AAA security defaulted. And they even had risk measures within banks that excluded AAA securities from any calculation of risk. So what happened is people started buying these all over the world and thought they were completely safe. The rating agencies got it wrong. The government was encouraging the production of these. The technology of securitization ensured that you could lay off the risk from the banks to the marketplace, and so it was spread like a virus all over the world. And the regulatory apparatus, principally in the United States, was completely inadequate. It allowed too much leverage. It didn't look at the subprime basically at all. And what happened at a certain point is that things just blew up. So this was not a crisis caused by one group.
Right.
It had a complex, like all accidents, it had a complex set of factors that caused this. And by the time you had Lehman collapse, you had actually already had a credit crisis, a rolling credit crisis, for the better part of a year throughout different elements of the capital markets. So there were a lot of things that were going on. They all could have been stopped at some point in the cycle.
So the system almost melted down, and there was a sort of crisis intervention by the government. What kind of marks do you give the government just for that period? Sort of stabilizing the situation, intervening and stabilizing.
Well, once you got into a full crisis, once Lehman, as the symbol, went bankrupt, you were basically facing a panic of a variety of different levels. And the government did a really excellent job of defusing that panic.
Okay.
And they did it with a lot of different mechanisms, which turned out to be very good. One of the curious things is that Lehman went bankrupt, if I have the dates right. I think it was like the 11th of November. And it just happened that UN week was the next week. What happens at UN week in New York is that the heads of somewhere between 80 and 110 countries happen to be in New York. And this financial crisis happened in New York. And so I was asked to join meetings by the heads of countries because they knew something was going on, but they didn't understand it. And so, one meeting at 6:30 in the morning with, Gordon Brown, who was Prime Minister of UK, was a very smart, financially literate person who really just wanted to know there were like 3 or 4 of us. What do we see happening? What should be done? One of the reasons that the rescue was able to really get into gears so quickly is that all of these heads of state, when they were in New York, were like calling their finance ministers and central bankers back in their countries saying, do you know what's going on with this thing? Yeah. And when they got back to their own countries, they were able to look into this in a way that in all probability they never would. It was just the luck of being in New York right after Lehman. But the actual operations of the combination of the Treasury with Paulson and the Fed with Bernanke and Geithner, support of the president, and ultimately the Congress, although they weren't there for the first TARP vote, the system really swung into action. And not just the U.S., but this was a global coming together, which stopped what could have been and would have been a Great Depression, rivaling the Great Depression of the 1930s.
So let's move now to the regulatory response. We had the crisis intervention, we had the stabilization, and then a really massive sort of a massive effort to redo the regulatory system as it was. How do you think about that in terms of the success of it?
Well, you always need some type of regulatory response because the regulatory system, by definition, failed almost completely. So you definitely needed a relook at the system. I think we could have done a lot better. Part of the problem in the United States is that, unlike almost every other country in the world, we have multiple regulators regulating the financial system. In most countries, it's pretty straightforward. You have a finance minister and you have a central bank, and somewhere in those two entities is you have a regulatory structure. We have at least 6 to 8, depending upon how you count them, separate regulators. So sometimes we have 2, 3, 4 regulators trying to regulate one institution. Right. And so what you get is often uncoordinated outcomes. which certainly happened before the crisis. There's a little better cooperation now, but that's the wrong structure to control a financial system. In other words, whatever some regulator thinks is okay is by definition okay, but if someone else doesn't think they're doing much of a job, you can't change their view. And so we have the wrong structure, and we should have reacted to this by reforming the structure so we could have common regulatory approach. We've done some steps in a general way, but we still have all these independent regulators. So that's the first thing. Secondly, we did a very good job, and this is led, principally by Tim Geithner, in terms of putting, and the Fed generally, putting more capital into the system. This was something that Paulson tried to do with the TARP, with the preferred stock going into the banking system, and that was well done. And the stress tests that we did to ensure the public as well as the banking system, that was well done. We've morphed into some other zone with a whole variety of things, from elements of Dodd-Frank to Basel III, and a whole variety, a cornucopia of changes from the Stability Board and so forth. And what's happened is we keep making steps, for safety and soundness. Safety and soundness is a good thing, but if you have all of these different regulators, different countries, enhancing already quite tough rules coming out of Basel with Basel III, it's almost as if the outcome is beyond safety and soundness. It's retarding the growth of the global economy. It's contributing to keeping unemployment in the developed world much higher than it would naturally be, and in that sense, it's a discouraging factor, and that introduces its own risks. Those risks are sometimes political risks, right? Because you end up getting populism as one of the outcomes of that, and that leads countries down avenues that don't necessarily end up providing a higher level of economic growth and a better outcome for citizens. And so we've gotten ourselves into a bit of an odd place. Some of the regulation is good, but they're like huge technical discussions. The risk-weighted assets make a difference in terms of how you regulate. In other words, do you care how risky an asset is, or do you just care that it's an asset? And if it has almost no risk, should it have the same capital reserves against it? Well, there are some people who believe they don't even want to know about how much risk. Let's just assume everything's the same because it makes it easier. Well, in point of fact, everything isn't the same. But it's harder to make that case, which leads to more and more draconian types of approaches. So it's highly technical, and a lot of it is being fought out in the public domain, where it's very difficult for someone to know how this type of intricate system really works. So defaulting to the simplest is a natural outcome, but doing that can retard the growth that people need to get jobs and to take care of their families. And the discussion, in effect, is a complex one in the developed world. So I think the outcome is mixed. From people who deal in the public markets, in the United States, they tell me there's less liquidity in those markets as a result of forcing a variety of financial institutions out of, what was referred to as proprietary trading, but there's a very difficult line which is quite difficult to find, which reduces in less inventories and less deep markets. And is that a good thing? When banks themselves didn't really get into trouble because of prop trading, they got in trouble because of loans, which is how financial institutions almost always get into trouble. So I think we have an uncompleted re-regulation. Re-regulation is good, but it's uncompleted, and now we don't have the appropriate integration between different parts of the world because it's very difficult to negotiate that. So I'd say that even though we're now 6 years from the financial crisis, there's still, just as an example, a huge percentage of the Dodd-Frank regulations that aren't even produced yet. And it's not because people are sort of lazy, and it's not because they're not focused. It's because this is very difficult to figure out, with all the different things that have been passed in that law, to how do you translate that into a practical working system. And so in terms of grades on this one, I think you get a bit of a mixed grade. You get high grades for safety and soundness. You get lower grades on how that translates into economic growth and delivering goodness, if you will, for the citizens, particularly in the developed world, because the emerging markets haven't had these types of issues as a rule.
Can you give us a sense of how to think about Blackstone in terms of its evolution to date and into the future, maybe the next 5 or 10 years?
In terms of Blackstone, we started 28 years ago as an advisory firm that wanted to go into private equity, and also in terms of our original business plan, developing a number of other areas. We didn't know what they'd be in 1985, but we did know we wanted to enter other businesses, both in the principal investing business and in the advisory area, which would have a lot of prospects for growth and high return to our investors. And what we've done is we've built a suite of these types of businesses, and currently we're the largest firm in the world in what's called the alternative asset businesses, private equity, real estate, hedge funds, and lower rated credit. And we're growing quite rapidly. We've grown around 27% a year, and we currently have, and this is 2014 in June, and this will be shown for a long time. So we'll have some different numbers at different points, but $270 billion. And I think the future for us, for a variety of reasons, is quite good. It's different than the more typical financial institutions. Since we went public in 2007, we've grown 3.5 times. That is highly, highly unusual. Almost all of the regulated financial institutions, in the sense of the banking system, has almost every bank has shrunk, almost everyone, just because to increase your capital by double, if you can't raise that capital, you're going to have to reduce your assets. We've been the beneficiary to some degree, though not as much as everyone would like to imagine, of some of that shrinkage from the banking system. In some cases, they've had to exit because of capital requirements certain very good, very safe businesses, which we've gone into, which remain very good and very safe. We at Blackstone are regulated also. We're regulated by the SEC, by FINRA, and other entities. So to think of us as if we're just sort of a free molecule somewhere is not the case. But we don't take deposits, and we don't have short-term obligations. People give us money typically for 8 to 10 years. So we don't have the problems that banks have, where people want their money back. So you have to keep the asset side of your business very liquid, because if you have to pay the money back, you actually have to liquidate something. We don't have that structure. And our investments basically aren't done by Blackstone, the firm. They're done by individual funds. So the firm itself is never at jeopardy, and the funds themselves are not cross-collateralized. So we have a very, very safe system. Now, our job basically is producing very high risk-adjusted return with very low risk. And even though an economist would tell you that's not possible, we've been doing it for 28 years. And we average somewhere around 1,000 to 1,200 basis points for a large part of our product suite. And what happens is when you earn that much more than the stock market, people find a way, whether they're institutions or individuals, to keep giving you more and more resources and assets to manage, as long as you can continue that type of approach. So for us, our biggest focus is managing money in a way that gets terrific results with very, very low risk. And if we do that and continue to do that, and we believe we can, that we will continue to attract large amounts of money. And the institutional community, having lived through the financial crisis, is very sensitive to preservation of capital. They prefer brand names that represent, in their own ways, safety but high performance. It's an easier decision to make. It's actually an essential outcome to have very little downside and an important upside, so they meet their actuarial requirements. So in a way, we're perfectly positioned for systems that have underperformed over the last 10 years in terms of what they need for their requirements. At the same time, we have the regulatory structure on the margin, making it more difficult for some of our former competitors to do certain activities. But it's less that regulatory arbitrage, which people are quite fascinated about. It's much more about just delivering a very superior economic proposition, if you will, to the largest pension funds and sovereign funds, as well as to individuals who need that extra return. So we think our prospects are quite good, and it's going to take some extraordinary circumstance, I think, to derail that.
So if we were to look at the landscape of financial institutions, let's say pre-2008, and I'm just going to take a number, 2018, one aspect would be that Blackstone, and maybe one or two others like you, would loom much larger in the overall global picture for all the reasons you said. And secondly, that some really good banks like Goldman and Morgan Stanley, they may not, the projection of what they might have been would be different now, given a lot of the constraints. I want to ask you about some other kinds of financial institutions, and just give me your instinct as to whether they are more or less important in the future. So one would be the big state-owned banks, the Chinese banks. There's a lot of talk about, China's financial reforms, and these banks are obviously huge. On a global scale, do you think that they will be playing a much bigger role than they did a few years ago? I'm going out 5 or 10 years.
It's a very complex place, as you know, and their banking system does pretty heroic work in terms of growing the Chinese economy. There are very few Chinese banks of any scale, whether it's 4 or 5 or 6. That's actually about it, and they are extremely tightly regulated, much more so than in the developed world. They started out as almost more agencies of the government than as independent banks, and some of them really just went public in the last 10 years, which is a dramatic difference as compared to the banking system in the West. I think that you can't look at the Chinese banking system without looking at China and its objectives for its society and its economy. The Chinese have announced they want the RMB to be a convertible currency at some point in the future, within that 10-year time frame. And that's a huge and consequential decision, because China's got the largest reserves in the world, and in 10 years, and certainly in 20, they'll be the largest economy in the world. And they're working hard at figuring out what that plan will be, because they're just not going to turn a switch and make the RMB convertible. It's going to be introduced very gradually. There'll be a number of experiments to see how it's working, and they'll continue to broaden it if it's working, or they'll change it if it's not. Now, in that context, you have to look at the Chinese banking system, and with the view that the primary purpose of the Chinese banking system is to make sure the Chinese economy is adequately funded, and that China is growing at a sufficient rate so that it can absorb its working age population, which is a huge priority. There are 12 million new people entering the workforce in China every year, and one of the government's top priorities is making sure those people have a job. So that's the primary mission of the banking system in China. Now, as China decontrols, will their banking system, much like the Japanese banking system, in the 1980s, started following its customers abroad and take a broader role. I think that will happen, but very, very slowly, because there's so many changes that are going to be going on within China that the last thing they can do is run any risks with their banking system. If you talk to the people running these institutions, they're a little frustrated. They see market opportunities, and they're not allowed to prosecute all those opportunities. No one knows exactly what's going to happen in the future, but my hunch would be that they'll be kept under pretty tight control, but you'll see more of them around the world, but it will be very gradual.
I'm going to go even a little more general now and ask you about the mega forces that you see kind of operating on the global financial system over the next 10 years. If you had to pick 3 or 4 what you would call maybe transformational forces, I mean, there may be many, but just in your view, just a couple, what's most important in terms of the way that the global economy is going to be shaped?
I think the internet is going to be a huge factor. So, for example, Alibaba last year decided it wanted to go into the the short-term money management business, and they are accumulating monies at an exceptional rate. Exceptional. People are just sending them immense amounts of money. And if you look at that system replicated, that's a change of enormous magnitudes. And as you look 10 years further, that's, I think, quite a disruptive kind of force, with the internet being used in all kinds of different ways for matching loans and disintermediating financial institutions. I think for the financial system, it's going to be the impact of politics and regulation. And if they keep it under really tight controls, and if there isn't enough capital really to facilitate growth in the global economy, in effect, we start constraining growth voluntarily, that politically this is not going to be acceptable. And you're seeing that in a variety of different jurisdictions, countries throughout the developed world. You're even seeing some of it in the emerging markets with demonstrations and unhappiness, and that may take us in places that nobody really wants to go. And those are like really significant issues that have to be dealt with, because if you deal with this stuff on a piecemeal basis, you're not getting the right outcomes, for better life for people all over the world, which is why you have financial institutions, right. And why you have an economy, not to satisfy themselves, but to create better lives and better income and better opportunities for people all over the world.
Steve, given some of these forces, and I know you also think a lot about technology and how it's changing industry and changing investment opportunities, do you feel that from a historical standpoint that we're at some kind of inflection point, or let me put it another way, are we in the middle of a third industrial revolution? When people look back at these couple of decades, are they going to say that something very fundamental has changed here, and that some people were able to recognize the new paradigm and benefit from it, and others weren't, but that it's a lot different than, let's say, 20 years ago or 40 years ago? Or is it just a continuum?
It's not quite a continuum. When I started in the financial industry, and I wasn't born in the Middle Ages, we didn't have calculators. We had slide rules. We didn't have databases. We had to go to the basement of Lehman Brothers and look at newspapers for stock prices with newspapers that were there for 125 years. And now, that's an absurdity. Everybody's got mobile devices. They've got laptops. Databases are so prevalent that anybody who's a 22-year-old sort of analyst at any firm can put together an analysis that would have taken forever if it even could have gotten done when I joined the business. Technology, this white-collar revolution, and the productivity and the connectiveness is unbelievable. And one of the things, and this also contributed to the financial crisis, is that technology has taken away the friction in the financial markets. Friction and imperfections are good things. They provide safety for a system. When everyone in the world can know exactly the same piece of information, the same second, then really odd things occur. It's a bit like being on a boat and somebody saying, we have a problem on the boat, everybody go to starboard, and the boat starts listing to starboard and you're almost falling over. They say, oh my goodness, we're going to fall over. Everybody go back to port, and everybody runs to the other side. And what happens as they do this, the amplitude of the boat and its rocking increases, and eventually the boat flips over because everybody on the boat's doing the same thing at the same time. And that's a risk that we are embedding in the financial system with consequences I don't think anybody understands. And so we truly are moving into a different world with the explosion of derivatives, which is like buying life insurance to have one person, have a bad event, and you could make 50 times the amount of that event. In the old days with insurance, you could just insure for the risk. With derivatives, there's almost no limit to the amount of money that can be made off of that one bad event happening. Or it may not be a bad event, it's an event, but sometimes they're bad events. And so we're in a risk posture that technology has put us in, which is much different. And you're seeing that risk posture and the use of technology affect the stability of governments around the world also. I mean, organizing demonstrations in repressive regimes was almost impossible. Now, with modern technology, people can communicate, get people on the street, and a government can disappear very quickly. So it's been quite transformational. And if you look even broader than finance, for example, in biology, what is it? It's like the amount of knowledge that people know in biology is increasing. I think it's every 5 years or some such number. You've equaled the amount of knowledge that was produced in human history. And so we're in an acceleration mode that's extraordinary. Now, where this takes us, I'm not exactly sure. Everybody knows. But to not be aware that it's happening, and to not think ahead, and to not utilize these trends to develop new approaches to business, new products, reach new markets, it's a very consequential time, and I don't think it's just a business as usual time. I think the acceleration of these factors has created a difference in kind, and so for those of us who started in a world with no technology, we're not quite horse and buggy, but starting with a slide rule is almost like working with an abacus, and you look at what's happened, and we're still the same people making reasonable decisions, we hope, but it's a really different world, and in many ways a world with enormous opportunity for people who understand it, and for people who don't, like at all times in history, they get left behind.
So, final question, because I'd like people who are watching this to really get a sense of who you are. I know that you have been extraordinarily generous in terms of philanthropy, and I also feel in a way that you fall into a group of people historically who've amassed significant resources, through your business achievements, and now think about how to direct some of those to more public purposes. I also have the feeling that a lot of wealthy people will look at what you do and sort of key on it or see it as a sign of the times. So my question is, How do you think about philanthropy in terms of, let's say, just basic principles? What is it that, in your various activities, do you have some guiding principles of what you're trying to do and why?
Well, philanthropy is really an interesting thing, and some people, historically have been very fortunate. They start businesses the way I have, and the business prospers, and you own a bunch of the business. And even though I go to work every day like everybody else, the rewards of that ownership position happen to be consequential, and exceeds the needs I have, obviously, as an individual, and so you have an obligation to take those resources and help other people. And I guess you could use a primitive word like recycle them and help other people. And so I've watched people in this position take different approaches to it, and there are a lot of winning strategies. Depends what you like. I like helping people have better opportunities in their life. I started as sort of a middle class person, and without great educational institutions. I went to a great public junior high school and public high school, and if I didn't have those wonderful teachers, there's no way I could have been able to do what I did. I went to two great universities, Yale and Harvard, for undergraduate and graduate, and again, that made a huge difference. So I was a beneficiary of a system that took normal people and gave them opportunities. And so I, as a person, am committed to doing that type of thing. And so I got interested in the Catholic schools here in New York, where they graduate 99% of their students. At the same time, 70% of those students are under the poverty level. 70% of those students are minorities. And to have changed outcomes in those people's lives is important. I've been a big supporter of the New York Public Library that also touches millions and millions of middle and lower income people and gives them access to resources that they simply don't have educationally. I'm doing a big program in China, very much like the Rhodes Scholarship Program, where we're going to be taking 200 students a year to China. It'll be 45% from the United States, 20% who are already Chinese and in China, and 35% from the rest of the world. And we're going to give them a unique experience. They're going to get a master's degree taught in English, but what's unique is that we're going to have them meet the leaders of the country. We're going to have them have mentors from among the most successful people in China in their fields, so they can go to their places of business or research, wherever, go to their homes. We'll also take them on trips around the country, and we'll form a cohort of 200 extraordinary future leaders. And the reason to do that is, as China is a rising power, is gonna probably attract heat from the rest of the developed world. That usually is what happens with a rising power, and it's important to minimize the friction between China and the rest of the world for all kinds of reasons, whether it's economic and trade, whether it's military. And this is another interesting thing that I'm doing. But I do a variety of other things beyond that. And I think it's essential for people who have the ability to help other people to do it. It's a very satisfying thing. And all of us want to leave the world a better place than when we got there. And you know, it's my only problem, Jeff, is I'm running out of time. You know, I work full time at Blackstone, and I love it. I love the firm. I love what we're doing. I have a really active philanthropic life, and you know, I find I like creating things more than I just like giving money to something existing, although I do a lot of that too. So there are a lot of challenges and opportunities. I mean, there are people who take a different approach. They're interested more in health issues. The number of different productive philanthropic activities is really almost limited only by the creativity of the people. You look at the issues that the Gates Foundation is addressing with health issues in Africa and other parts of the world. I mean, some of this stuff is remarkable, and you know, if I can live long, which I'm rooting for on a personal basis, you know, I'll be able to do more and more things. And then, you know, after you pass away, you know, people leave estates, and you have to think through how that's used for the benefit of other people as well.
Steve, I want to thank you. That was a really good discussion on a lot of different issues. Thanks a million.